They're here. Tesla's earnings are out, and they don't look too good. That's taking down the stock market, but that might not be bad news for bonds. If we go over to the equity markets or the bond market over through here, here's what we're seeing in the markets right now. We have the MBSs, which are basically flat as a pancake. That's good news. At least mortgage rates aren't going up or down. So the markets are flat right now. We did have some good news on the economic calendar. Let's get over to that here in 1 second. Right through here, the 20-year bond auction traded at 4.5. Last time it took to get rid of all this debt on the 20-year auction, it took a rate of 4.6. That means it's taken less interest rates or to get rid of a lot of government bonds. So if we see these rates come down, we're also going to see mortgage rates follow accordingly. So the bad news that we have coming out potentially is coming out on Friday. We're going to get the CPI number, the consumer inflation numbers. Now, all the economists right now have been flying in the dark, and so on Friday, we're going to get some news on the consumer inflation. Don't know how that's going to come in. That's why I've been advising people. If you own a house right now, one of the things I would prep you to do, go over to our website, use the RateWatch tool that we just created. It's right through there. It's RateWatch 2.0. What it allows you to do is plug in your mortgage information and then let me know what rate you'd be interested in refinancing. And when it hits there, I'll reach out and we'll go over the numbers. But right now, here's what it's looking like. We have mortgage rates. They're stable. I think they're going to be stable into tomorrow because I think it's going to be a shaky market as the earnings season progresses tomorrow. We have a lot of data coming in. But if earnings start missing, it's not going to be good news for equities because equities are already a little overpriced in my opinion. So you're just trying to find some data for a pullback. But again, as the money comes out of here, where is it going? It's going into treasuries like we went over in yesterday's Stock Talk Tuesday. Check out that video. But a lot of it's going to go over into the bond market as well. So it's going to cause the bond markets to most likely push up in prices, bringing down the rates. Not much,